Welcome, dear traders. You are watching a recap of the Asian session. On Tuesday morning, shares scored gains. Australian equities were the first to climb. After that, Japanese and New Zealand stocks followed suit. However, China's stock market failed to rise due to downbeat data on industrial profits for February. Traders were highly disappointed with this report. In the first 2 months of 2023, industrial profits slumped by a whopping minus 22.9%. For comparison, a decline in the indicator began in July 2022, and by the end of the year, it totaled only minus 4%. This is bad news, not only from China, but also for other countries in the Asia-Pacific region. For them, China remains the main trading partner. Its domestic problems will inevitably affect demand. After a sharp drop in China's industrial profits, traders recalled KRISTALINA Georgieva's positive comments on China's economy. She said on Sunday that China is showing green shoots of recovery. This matters for China and it matters for the world, she added. Recently, there have been lots of speeches by policymakers from different central banks. They largely touched upon the topic of the banking crisis and the possible risks to the global financial stability. Before they rushed to assure investors that everything is under control. They are ready to provide help in the case of a new bank runs. German Chancellor Olaf Scholz, Japanese Finance Minister Shinichi Suzuki, Christine Lagarde, as well as many other ECB and the Bank of England officials made such statements. Fed policymaker Michael BARR will deliver his comments on the situation in the banking sector in the Senate this week. He called the failure of the Silicon Valley Bank a textbook case of a mismanagement. He also stressed that banks regulated by the Fed are well protected from a bank runs through a robust array of supervisory requirements. The Financial Stability Oversight Council also called the banking system sound and resilient. Capital outflow from the small banks to large ones has slowed down. Nevertheless, the US authorities are considering the expansion of an emergency lending facility. The news about the acquisition of a Silicon Valley Bank by First Citizens boosted optimism in the stock markets. While investors are waiting for new reassuring comments from regulators, demand for risk assets is growing, and this is rather negative for the US dollar. Although in recent days the greenback has climbed due to the risk aversion and the overall trend remains bearish. However, revised GDP figures, which are on the tap this week, may impact its trajectory. Therefore, the short-term prospects are rather ambiguous. The US dollar is also unable to resume a steady rise due to monetary policy expectations. The Fed will make a rate decision based on the incoming data. On Tuesday morning, the US dollar index dipped to 102.60 versus its main rivals. In the Asian session, it was moving in the downward range of 102.50 and 102.80. Besides, it failed to grow following an increase in the US government bonds. One should keep an eye on this strange discrepancy. If Treasuries advance higher and the US dollar declines lower, it may signal strong demand for commodity currencies. Meanwhile, the yen retains bullish momentum. The dollar-yen pair approached 130.50 in the Asian session, and the yen turned out to be the strongest currency on early Tuesday. Amid the weakness of the greenback, it entered the range of 130.50 and 131.60. The start of the week was quite favorable for the yen. It's up today even despite rising US government bonds. One should not forget about its appeal as a safe asset. Besides, at the end of the fiscal year, Japanese foreign companies tend to convert their profits into the national currency. It seems that the pair may tumble below 130, especially amid the comments by Finance Minister Shinichi Suzuki. He said that the impact of the Swiss credit use crisis on the Japanese financial system will be very limited. His remarks came after Prime Minister Fumio Kishida said he was carefully monitoring developments. Japanese financial institutions have ample liquidity and capital, therefore the financial system remains stable as a whole, Kishida told a parliament session. Commodity currencies resumed growth on Tuesday amid increased risk aversion. The Australian dollar slightly sank in the range of 0.6646 and 0.6697 during the Asian session. However, it managed to add gains on a positive news related to the global financial sector. Hopes that the turmoil in the banking sector may be overfueled risk appetite. Speculators also reacted positively to Australia's retail sales for February. Nevertheless, the Australian currency is still close to multi-month lows amid the Reserve Bank of Australia's policy reversal. Besides, after an increase to 0.6675, the Aussie retreated. It may fall lower after the release of the US economic reports. The New Zealand dollar is also trying to take advantage of the weak US dollar in the Asian session. The Kiwi dollar pair was trading in the range of 0.6196 and 0.6240. The Kiwi also rolled back from the monthly high of 0.6295 and trading at 0.6220. However, the Reserve Bank of New Zealand may raise the rate at its next meeting on April 4. Hence, the Kiwi may try to break through 0.6294, moving away from the early low of 0.6085. And that's all for now. One should always remember that it's possible to reap a profit even amid the sharp price swings. To do so, you need to have the latest market news at your fingertips. Subscribe to our channel and learn about market developments with us. See you soon.